All you need to do is look at the title of this show, and you know what you're in for the next 60 minutes. All in on AI, thanks to Oracle. Be careful if you hit it on the EPS and the sales because you could have got run over. But I got some bad news, folks. Not all your stocks are going to be up today because Oracle's up so much. They're going to be selling other stuff. They're going to talk about how bad the breath is. Apple event, wake me up when it's over. Folks, Lord Chico, 8:35. We got to talk biotech. Now's the time to talk biotech. Folks, we're rocking and rolling on this Wednesday. Let's start pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We are trading at the all-time high, 65.43 up 21 handles. Haven't even sniffed the close yet, thanks to Oracle. The buck up a few pennies, 97.78. TLT flat, 89.19. USO back on its way up here, bouncing off 72 again, up 71 cents, 74.10. GLD up $1.80 at 335.86. SLV participating today, up 15 cents at 37.33. And Bitcoin, that's up a solid K, 112,700. Let's bring in Dennis. And Dennis, I mean, I've seen earnings reports, which is not the thing, and I've seen guidance. But this kind of guidance going out to what, 2030? Unbelievable.
It was an unbelievable report all around. Brentster, come on in here too, and we'll cover this Oracle. Just breaking news before we go. Potbellies. Potbellies was halted 5 minutes ago. It's getting bought, Joel. You called this. Potbelly, you called this just 3 minutes ago. He said, halted, somebody's buying. And I was like, nobody's buying Potbellies. Oh, yes, indeed they are. So PB going off the board here, $17. And
really?
Saw Racetrack is buying Potbellies for $17.12 a share in cash. They're going to buy the whole thing. Racetrack has subsidiary Hero Subs, and they're going to buy that. So that's your news on PBPB. If you're just wondering, that just broke. So going back to Oracle.
All right, let's just talk about the report. And boy, algos are being reprogrammed. Don't hit on the EPS and sales. That thing actually went down first.
Oh yeah, show it. Good call, Joel. Show it. Bring it up. Show this chart here. So you won't hardly see it there. You got to squint your eyes there. But Oracle tanked initially on this report. It is just insane that this algo runs on these earnings and just pisses money away all over the place. So it hit it down 17 points. It went down 17 points in like 17 milliseconds. They're like, it's a miss. It's a miss. And what the algo is reading, we can read it too. So if we just go and look at Oracle's report here, they missed on both the top line and the bottom line. 1.47 1.48, 14.92 billion versus 15.03 billion. The algo just reads that. Miss, sell. And they knock it down. But then, when you dig down into the presser, Brentster, which you were doing, presser comes out. You dig down, you see the guidance. You had to dig.
You had to dig. A lot of these earnings press releases are sections with guidance, sections with outlook. They make it really nice and easy to read. Thankful for that. Oracle, in the context of a comment from CEO Safra Catz, a big long paragraph, it's way at the end. And the comment is, as a bit of a preview, we expect Oracle Cloud Infrastructure revenue to grow 77% to $18 billion this fiscal year, and then increase to $32 billion, $73 billion, $114 billion, and $144 billion over the subsequent 4 years. For this quarter that was just reported last night, the company's total cloud sales were $7.2 billion, and the cloud infrastructure sales that the guidance was gave for was less than half of that at $3.3 billion. So this is less than half of just their total cloud sales, and they're talking about this being over $100 billion by 2030.
Is this reasonable? You know, that's what's going to be the question here, I guess. But I mean, when you look at this and give perspective on this, 3.3 billion to 144 billion cloud infrastructure revenue in 4 years. That's what they're predicting. That's a crazy growth. That's insane growth. I'm like, I don't even know how to I've never seen growth like that. Again, this is projections, so we don't know, but sounds like this 5-year forecast, they are saying cloud infrastructure is going to be a huge portion of the revenue. I mean, when you think about this, they just reported 15 billion in total revenue for this quarter.
Right.
They're saying 144 billion from one portion of their revenue in 5 years. So they're looking at the company to grow revenues exponentially here. So this is what the market was not prepared for. And that news algo, man, they're going to shut it down eventually if it keeps having trades like this. There was little chance for it to cover. It swept out. Then human beings who can actually read the report start buying it up on it. And it just didn't.
Oh man.
It
traded millions of shares. It traded. It traded a lot of shares here. I'm going to say something that no one wants to hear. I'm going to bring in sports in this. This is good. This is good for the University of Michigan.
Yeah.
Yeah.
That's why.
Oracle's wife went to Michigan, and she's a huge donor. And she brought in our $12 million quarterback who looked like a $2 million quarterback.
So you love Oracle.
Yeah. Yep. I love Oracle.
We're finding.
You own shares?
Hopefully through some ETF.
Oh, you don't know through some ETFs. We all do. Hey, this is a good segue, Joel.
I own it.
Look how smooth he is. Okay, bring up your ETF channel. We're going to look at etfchannel.com and just making a point here. So Oracle is number 21 on the list right now. But because it's gaining $200 billion worth of market cap just today, a 33% move, it's going to move all the way up. Now, again, other stocks are moving here too, so it's like projections, but it looks like it has the potential to move all the way up to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It looks like it can move all the way up to 14th place. It's going to jump 7. It's going to jump maybe MasterCard, Walmart, Johnson Johnson, Costco, Home Depot, ExxonMobil. These are big companies this thing's going to jump here today, folks. So, boom. It's not top 10. But it's right there on the cusp. And if to get to top 10, number 10 is JP Morgan. It's got to go up quite a bit more to get to JP Morgan, but it's not far from Visa. So, I mean, and Eli Lilly and Netflix. So, I mean, you actually going to be close to Netflix. They'd be close to 13. Actually, it might pass Netflix, 33%. It might be really close to Netflix. So, 13, 14 on the top. So, top 15? Oh, yeah, Richard. Top 15 for sure. So it's a big move for Oracle, and it's a big move for AI because you know what this did? It put AI. If you thought AI was cooling off a little bit, the trade, and the AI trade just never seems to cool off. It cools off for a day or two. The money is flying back into it this morning, and it's flying back in a la the big names. NVIDIA up 3%, AMD up 4%. I like that. AMD, one of the biggest positions in my long-term portfolio. Just going across so many other names that you were pointing out: Cloud, Snowflake, Arista Networks, CoreWeave having a day, man. It's up 12% here now. CoreWeave really moving here. Brentster, you had a few other ones too.
Oh yeah, those other data center infrastructure plays from Monday, like
IREN,
those also moved, and it's so interesting seeing where the algos, where the traders go to first. It's so interesting seeing the timing, those data sets. Obviously, NVIDIA and AI, AMD moved right away. Snowflake, Micron, Western Digital, they were a little later. The data center infrastructure plays were almost right away, and kind of like a second or third wave of theme that this trade moved into was the data center energy need names, like Bloom Energy, ticker BE, has a deal with Oracle for providing data center infrastructure energy needs. Also Vistra, VST, also Constellation Energy, CEG. That's how much of this spilled over, this intensity towards getting excited again about the AI trade.
Incredible moves here. Boris, a great question. Why is it only up 30% if we're seeing this revenues growth?
I know.
You want to know why? Because markets do not, and this is like a phenomenon that I've never talked about on the show before, but it was the Apple phenomenon back from when the iPhone came out. And we watched this in 2008, 2009, 2010. You didn't see it in 2008, 2009 because of the financial crisis. But right after the financial crisis, the iPhone came out. And then it was 2009, 2010, 2011. And I kept saying, and I was like, I can remember even being at CFA events, and talking about this and saying that the stock cannot keep up with the growth. Like, because it's traded and it's such a big company, it's like going up every day because it can't keep up with the growth and it's trying to reprice. But stocks, a small cap stock will reprice instantly. But when you have a stock, Joel, with a market cap, of like an Oracle, it's hard for the stocks to move because there's so many people in there. So they can't just reprice up 100% in one day.
Very interesting.
They can't do it. So I can remember Apple having that growth, and my buddy Chris Banier, who we've had on the show too, was the one that was all over this. He's like, Danny, this thing, the growth is just phenomenal here, and it's going to continue to go higher. And he was all in on Apple. Wow. Apple calls, Apple this, and it's like he was so levered Apple, and he just made his whole life off that because he made that call that the stock is just not keeping up with the growth. And here is the potential for the same thing. I don't know, and I don't want to get all excited. These are projections, this is all
exactly.
new, but so it's hard to just come in and say. But stocks just don't reprice. Like a 31% move for a stock, the market cap size of Oracle, is usually almost unheard of. So, I mean, we have seen it in this earnings season, and we have seen it lately, but it's very hard. So that's why this is such an impressive move, and it's continued to go up here too. If they are correct on those projections, the stock is going to go a lot higher. Are they correct? It's hard to say. They're projections at this point in time, and it sounds almost absurd, to say you're going to get your cloud infrastructure revenue to go from $3 billion to $144 billion. It doesn't make any sense. Like it almost sounds like it's a typo. Like it should be 3.5 to 14 or something. But it's not what's written in the press release. So that's why the stock is trying to massively reprice. But stocks the size of Oracle, the stocks that are in the top 20 components, cannot just reprice like a penny stock and go up 1,000% in a day. They just can't do it. There's just too many players. There's too much institutional ownership. There's too many ETFs. The stock is just simply too thick. But it's an impressive move here, and I think it continues to climb here this morning. And I don't know. I think at this point in time, we're buying dips on Oracle if those revenue projections are true.
I mean, if I don't want to throw any price targets or, I mean, is it if they really make that kind of money in 5 years, isn't this like $1,000 stock?
Yeah, maybe.
I mean,
if, and it's a big
if. Yeah. I mean, you get a cancellation on one of those, it's still good. But also, I just want to point out, and this is something that our ST members are privy to, watching the order flow off the open. We key off a lot of information on the open. And for the last week and a half, Dennis says there's a big buyer in Oracle on the open. That just means they want to be in. They don't care. They know there's liquidity there. They want to buy 100,000 shares. They want to buy 150,000 shares. The stock opens up $5-6. Dennis shorts it. It comes in a little bit. Good thing he doesn't stay shorted. But you had because I jot this down, a buyer on the open.
They're there again today.
Really?
Whoa.
Yeah, because it's early and it's hard to tell, but usually institutions don't show their order flow very early. And how we can tell this has been happening, because at 8 o'clock, New York Stock Exchange imbalances come out. And there's sometimes just a player there that's like got their order in there early. It's another 94,000 shares to buy here again today. Now, again, there's going to be a lot more than that. It's going to go up into but it was there off the bat. And I just wonder if it's the same player just buying again. There's been somebody, to your point, Joel, buying 100,000 shares of Oracle every single morning for like a week. And I don't know why. And again, it's only 100,000 shares, so we're not saying it's like the biggest player in the world. But man, that's 100,000 shares, another 100,000 shares. They bought like 500,000 shares at the open, and we don't know if they're buying it during the day too. Yep, 76 points. I mean, they just printed a lot of cash here. That's a cool $7 million if they bought 500,000 shares. It's not a bad little trade for them. And then maybe they're doing options, and maybe they're doing other ways too. But there's been somebody every single day buying 100,000 shares of Oracle for a week. It's impressive. Somebody's like believes in Oracle. I thought it was the earnings run up that was doing it, but now I'm not so sure. I mean, maybe they were just like, they're like a big believer here in Oracle. So, I mean, this is huge. This is huge. This is going to be your story of the day. It's driving all those stocks we just talked about. It's going to reignite the AI trade. What you are going to see today, folks, so if you're all excited about your value names and you know all your other names, don't get too excited here, folks, because the SPY game is all Oracle, NVIDIA, and AMD, the whole thing. So what's that mean? The other 497 stocks collectively have to go down. So RSP will give you a better feel. RSP is actually trading in the red, down 20 cents today. That's what those same 500 stocks are doing if they're equal weighted. So this isn't going to be an everything rally today, folks. This is going to be an AI rally. And I think it's going to be AI versus other stocks. We're seeing banks trade down. We're seeing drugs trade down. We're seeing, retail stocks trade down. We're seeing consumer staples. We're seeing some tech names trade down. We have right now Apple down, which we can get to in a second, Meta down, Google down, Amazon down, Netflix down. 5 of the Mag 7 is down. This is your classic, like the AI stocks. Like again, Google, Apple, they're AI to a certain extent. Well, but Apple's not. Apple, we saw that yesterday. Apple's an iPhone company. Not that much AI going on there yet. Pure play AI stocks like NVIDIA, AMD, and now Oracle. I mean, that's where the money is gravitating
Micron,
today.
CoreWeave.
Those CoreWeave having a day, man. It's up 11% here now. We'll pat ourselves on the back here again. We set up this trade in the double bottom at 85, and it's moving up on CoreWeave here. Obviously, the news helps, but we've also been playing this through CORZ too, which it's a good winner for me again last night. Two days in a row. CORZ has been my biggest winner there, and CORZ has been trying to keep up with CoreWeave, and it just can't. Obviously, they're buying that. There's just been a lot of like trades that are predictable lately if you are following relationships, and that's what we're big on this network, on Stock Trader Network. We're big on relationships. Charts are pretty, charts are nice, you can make some money with technicals, but relationships drive the bus.
Just real quick, Dennis, is there a borrow on the CoreWeave yet? Because you weren't touching spread.
Oh yeah. It's not cheap. You want me to go give you a price on CoreWeave?
Yeah. So that'd be a fun spread to
this
trade.
Obviously, each broker is different, so you can't just say, oh, it's each broker is different. But CoreWeave fee rate, oh gosh, it's down to like that can't even be right. It's only 0.28%. It's really low. So it's back down to a normal stock. That's where normal stocks sit. So CoreWeave borrow is easy and cheap. I can't believe it's gone that cheap. So lots of liquidity there.
Yeah, because all the shorts covered.
They're all covered. Everybody has now. Everybody's
you can have my stock.
If you weren't short.
Yep. We're just talking about the rotation and with an event, we'll bring in Apple. Brent, any highlights or lowlights from the Apple event?
I think a lot of lowlights. What were you going to say, Dennis?
Yeah, no, I think it's a good segue just to say that I don't think money's going to fly in Apple today. I was disappointed. Brentster, you can sum it up for us quickly.
Yeah.
Just give us a summary, but we kind of got it right. We said this when we started the show Monday morning that it had leaked that the big announcement was going to be a thinner and lighter phone. And I'm like, that's not going to cut it. That's not going to cut it. And it's not cutting it.
And that was it. That was it at the event. That was the iPhone Air, they're calling it. Starts about $1,000. There's a couple other iterations of iPhones, 3 other iPhones that they unveiled. Improved camera software, business as usual there. The highlight, if you want a little perspective here, the way that Tim Cook highlighted the new iPhone Air, one of the things that he highlighted was the case is polished to a mirror finish. That was a quality level of the insight there. Apple Watch 11. They said the iPhone Air is durable. Qualcomm moved on during the event. They mentioned a new modem that is going to be in the new iPhones, and I think Elgos read that as Qualcomm's not going to be doing the modems for iPhone anymore. That did not seem to be the case. The stock came back right away. Apple and Qualcomm have a deal for modems in the iPhone for like the next 2 or 3 years. So I don't think there's any concern there. That was kind of it. That was kind of it. It wasn't much
I
of
have
an
one more
exciting
thing.
event.
I have
What?
one more thing, and
Yeah.
I think that, I mean, it's so hard to watch those things. But they started out
Boring.
with improvements to the iWatch regarding health settings, Dennis. I don't know if you saw that. Like to monitor hypertension.
Hypertension
Yeah,
detection.
and there's like they really tried to sell this at first that there's 1.6 billion people, and they had Gene on talking about it and how that's going to improve their lives, and how insurance is now going to be covering it. So that's what they, at least in the order that I saw it, and I'm like, really? This is
This
it?
is
This
what
is
they're
before
opening
they
with.
announced the thin phone? Now, health is important. And, if they're trying to use their ecosystem to improve people's health, then hey, I'm all for it. I just think in this market, I mean, the iWatch, I mean, I have one. I use it for, different
I
things,
have one too.
but I mean, come on, in this
Yeah.
market, you
Right.
they gotta stop doing those events or do one every 2 years or something. They're nothing but disappointments.
Well,
There's a few.
think of,
Go ahead,
go ahead,
Dennis.
Brent. I was gonna say, I'm just trying to sum it all up. Steve Jobs, was the creator of the iPhone. He invented the wheel. He invented the wheel. They put, better rubber on it, some nicer, spokes, they kind of made a little bit more, but they've never invented anything since. This was all their innovation was created by Steve Jobs. All they have is tried to perfect it, tried to make it a little bit better, tweak it, tweak it, tweak it, tweak it. At a certain point in time, when you're paying 36 times current earnings, you need to stop tweaking and start inventing. And if you have been invested in Apple for the last 2 years, you're basically, we're just going back, 2024, the stock was the same price it is now. So if you're invested for the last year, you're up nothing. If you've invested in the last 5 years in Apple, let's go back to 2021. It was $180. It's $230. It's up 50. It's up about 30% in 4.5 years. This is massively underperformed the Qs, massively underperformed most of these other tech names here. It hasn't been the place to be. So Kramer can go around prancing around and say, own Apple, don't trade it. I tell you, the people who have been trading Apple have made a lot more money in the last 4 years than the people who have been owning it. It has, and again, even the reason it's up, you got to understand the reason it's up, which we said is all multiple expansion and buybacks. They have not grown the top line for years. They have not grown revenue for years. Oracle's talking about taking their revenue up from $3 billion on this one little portion to $144 billion. What the hell is Apple doing? It's time for Tim Cook to go. It's time for Tim Cook. We need new management, new leadership that is going to show us something that's not just a thinner and lighter Apple iPhone. I think the market eventually wakes up. And again, is the market, waking up? They kind of have. It's underperformed anyways. But maybe it actually gets to a point where the stock starts going down. And maybe that's what would get Tim Cook fired. Because I think coming in here in Apple and basically coming in, and again, I've been saying it right now, a 30%, 4% buyback, it's all buyback. The whole growth is
dividend. That is the dividend.
There ain't much dividend in Apple. The Apple dividend 0.45%. So you haven't, even if you're an AT&T and stuff, at least if you're Verizon, you're getting a pretty big dividend here. The growth hasn't been there. The stock has underperformed. The stock's underperformed for a reason, because there's no innovation at Apple. The innovation is dead.
I do have a couple pieces of commentary last night from a couple analysts. Would you be interested to hear some early takes, Dennis?
Yeah, please.
So Baird analyst said the event featured no major surprises, but several solid updates. There were no updates on Apple Intelligence, though still a key long-term opportunity. Dan Ives from Wedbush saying the company's focus on much improved internal product efficiencies balanced with bold redesigns and practical new features interwoven with Apple Intelligence sets Apple up to launch towards an eventual super cycle over the next 12 to 18 months, while the company looks to improve its AI strategy that's holding the stock back. So at least Dan Ives thinks, yes, there's still a path to AI, and it seems like he feels comfortable about Apple trying to figure that out over the next year to a year and a half. I don't know if I agree. Dan Ives knows a hell of a lot more than I do about Apple, but I don't know if I agree.
We love Dan Ives. He's, made some fabulous calls. He's, been right about so many different stocks, and he may end up being right about Apple too. I just don't think, like, from my perspective here, it's like we've given it so many passes. At a certain point in time, the market's going to say, does it give it another pass? We keep saying they're going to figure AI out. They're going to figure it out. Well, you know who else is figuring it out? NVIDIA. You know who else is figuring it out at this point in time? Microsoft. You know who else is figuring out? Is Meta. And Meta's stealing all their execs for a reason, because the execs are on the inside. Why do they keep going over to Meta? Why are Apple execs going over to Meta from Apple? Because they're on the inside and saying, Apple ain't going anywhere here. So I still think we're at a point where this is an iPhone company with an AI call option, and we don't know if that AI call option is going to work into anything. I'm not paying 36 times for a cash cow staple. 25, maybe. 36 times, no.
Okay, so should we do GameStop?
GameStop? How do we go to game? Okay, yeah, sure. Okay, I got to read the tweet from Ryan Cohen because it's funny. Give me the GameStop earnings and I'll find the tweet.
Okay, GameStop surprised the street. A beat of 9 cents, 25 cents versus 16 cents. Beat on sales, 972 versus 823. Estimate. Holdings were valued. Who cares about that? They're raising money. You know what they're going to raise that money and do? Special dividend of warrants where shareholders receiving 1 warrant for every 10 shares. So little bit of financial engineering, but up $2.
Ryan Cohen tweets out. He only tweets like once a month, so it's always funny when you have Ryan. Like his last tweets, he tweeted on August 27th, then he tweeted on July 19th. He only tweets like once a month. So when he tweets, it's actually pretty cool. He tweets out, not bad for a piece of crap retailer. I love Ryan Cohen. He's so funny. That's all he tweets out. That was it. Obviously, the CEO of GameStop. Not bad for a piece of crap retailer. Agree. Not bad here. Good earnings. We know it's like basically a holding company for crypto here now, but they're doing some other stuff apparently too, because they made a little bit of money here. So good for GameStop. I've been saying low 20s. I mean, low teens is a no-brainer to buy, but it's not getting down there because that's where the cash holdings are. They got a pile of cash. They got some ideas. They have Ryan Cohen there. I mean, he said himself it's going to be a slow and steady race. He's not looking to get rich quick here. He's already rich. And he said that, on CNBC, that if you're looking to get rich quick in GameStop, this is not your stock. That's why the stock's been really depressed here for a bit. But this kick starts. It's a good quarter. GameStop, I've been in it a couple of times. I'm not in it now, but wish I was.
Just a price action here. You popped over 26.50 twice, 26.61 and 26.70. That's all within the last hour and a half. You've come off that level, so we'll follow the playbook. If you want more gains, you got to get up and take out that pre-market high for GameStop.
And then also reporting here this morning, we might as well do the brother-in-law, Chewy. Obviously, Ryan Cohen came from Chewy here, which is why, there is a linkage that's going to be there forever here. The earnings were pretty good here. 33 cents versus 14, 3.1 billion versus 3.08 billion. Being on the top, being on the bottom, what gives? Oh, it's guidance gives. But the guidance isn't even that bad.
It's not bad.
12.3, 12.4, up to 12.5, 12.6. This isn't bad. I don't know what the algos, these algos are, anyways, I don't think it's that bad, but it doesn't matter. The market has spoken. It's not about the earnings. It's about the reaction to the earnings. And the reaction to the earnings are not that great for Chewy, the dog food store.
Online dog food store. Trading on the lows of the pre-market session had basically a 10-point move, but you've given back over half of that. This is my candle of interest right here. So you will be focusing on the day. It had a big day. It leaped from 36.21 to 39.41 with a low of 36.67. So if you're looking for it to get cheaper, that's the daily low to keep an eye on from August 13th. Dennis, you need to go wide in 10 seconds here.
Going wide.
Can PPI mess things up for us here? This rosy morning, everything's okay. Nope, it's light. It's light.
It's light. That's
I don't have the data yet.
I have the data. It's light.
Hit me, Joel.
The way pop the spoos up to 65.25, I have to say it's
PPI light. Comes in down 0.1% month over month. We were looking for a 0.3% increase for the PPI figure. I do not have the year-over-year figure, but that is sharply lower than expected for an inflation reading. Again, down 0.1%. We were expecting a 0.3% increase for the month of August.
IWM has been down all morning and just ripped on this. So IWM has been underperforming because we've been talking about the rotation. I did just sell it into that rip on IWM because I still think rotation station here, it just went up just as much as SPY. I don't know if that's going to be the case when the dust settles, but this is good news. So PPI being light is what we need to see, because was it PPI last month that was the outlier?
It was horrible. It was horrible.
Was it the PPI? Because
yes.
we get the CPI, we get the PPI, we get the I know it wasn't the CPI, and then what's the other one we do? PCE.
Yeah.
But it was PPI last month that was like the outlier, like 10 standard deviations more than like what it was supposed to be, where it was really hot. So, and then we know these things, they don't get them right. The revisions, they do this, because it's all like, they figure this stuff out. But anyways, wow. So good news. And, lie detector tasks go to TLT. Up a little bit. TLT not really moving too much on it here. So IWM has popped up. I kind of think still with that, if it's going to be AI day, maybe this changes things. But I think if it's going to be AI day, I think I'm more of a seller of the rip on IWM. Sorry.
Well, you already did.
I just sold the rip on IWM.
Yeah. Wow. I got to 238 and change. 238.18 was 238.51. Pretty good volume there, starting to come in already. S&Ps are coming in too. The only reason I had some pivot point formula resistance on a weeklies. That's what you have to do when the market keeps making new all-time highs. There's no relevant levels. Little bit of a fade here, 13 handles off that high. But the algos reacted very quickly, scooped up the book, sold, and now we'll see. Important is, where do we find support in this market? If we in fact pull back, but clear breakout. Oracle, what's Oracle doing? That's a bunch of stupid. That's
ain't gonna move on this.
Yeah, Oracle.
This is all so again, when you're looking at inflation data, it's not the tech stocks that care about it. They're winning no matter what. It's all the other stuff, all the value names, all the small caps, all the biotechs, and we're actually some biotechs we're going to talk here in just a second here. That's what matters with rates. Rates, are because those stocks are sensitive to rates. Some of your main tech stocks, Oracle, they're projecting out. If their interest rates come down a quarter or half, sure, it doesn't hurt them.
They don't care.
But it doesn't matter as much. It definitely matters. All these small caps are all borrowing money. Half of them are burning cash. I mean, rates coming down helps those companies. So those are the ones that benefit. So if you're trading, your tech stocks off the CPI and PPI, you're better to go trade the IWM. That's going to get the bigger moves.
All right, let me see if there's anything else to keep an eye on. No, we got Dr. Laura Chico in the background for Wedbush, and we're going to talk about a sector that's going to be benefiting from the lower interest rates coming up. Dr. Laura Chico, Managing Director, Wedbush Securities, joining us here on PreMarket Prep. And I don't have the chart up here, but I'm looking at this XBI chart, and I'm thinking about being a biotech analyst since 2021, and the pain, the drain, going down. And took a while to consolidate, but now it's a little bit different. You wake up in the morning, it's a little bit more exciting to cover here. So just give us the perspective on this nice move we've had so far in 2025.
Oh, you're on mute. I'm going to unmute you, actually.
Let's get off mute first. Okay. You kind of hit the nail on the head. It's been a bit of a roller coaster. But, since roughly April, I think we've been really kind of starting to rally, in the last month too has really shown some strength, which is very interesting because September historically is not a great month for biotech. You've kind of cleared the deck from the second quarter earnings, not a ton going on into the end of the year, but this year kind of stands out as an outlier. September, heavy data rich months with a number of companies reporting data. I think we still have a good slate of PDUFA dates, so FDA decisions coming up here. And then you mentioned the rates. If we get a little relief there, I think that'll put some more gas on the fire. And then M&A, we actually had an acquisition announced this week. So I think when you think of all the sector drivers for biotech, we're starting to see a lot of green lights here.
I think so too. And obviously interest rates are going to help this. And we know that interest rates are going down. I say we know, and we do know. They're dropping interest rates a quarter here. But I mean, this, to Joel's point, has been definitely a headwind for biotech names. You think about how many smaller companies need to borrow, financing their trials. You know, a lot of these companies are pre-revenue even in some cases, most cases probably. So, I mean, when interest rates start going up in 2022, it's not surprising that, you know, XBI has a rough time. So does the landscape now change that we go into a rate cutting cycle here where, you know, XBI benefits from those rates? And then I want to jump into some individual names too, but I just want to talk like the whole overall interest rate picture in the case of biotechs.
You know, and I think definitely the interest rate plays a role. And I think it's also been, though, a little bit of the tech unwind. So you guys were just talking about Oracle, Apple, all those names. And the AI revolution is obviously, one of my peers talks about that quite a bit. But it takes a lot of oxygen out of the room. And especially when you're talking about a high-risk sector like biotech, it's really hard to get the share of voice. So I think we've kind of benefited from a couple different things. But yeah, the interest unwind too, I think as rates are going down, if you're still looking to get upside and reward, this is a sector that can really deliver. I think, you know, in terms of the index, I still think it's going to be a stock picker's market. So I still think you're going to be wanting to look for companies that have some element of de-risking, near-term catalysts, things like that, and a strong balance sheet to kind of get you through the near term.
I was going to say, and talk about stock picking, you were covering Tourmaline Bio here, and good news for you just yesterday here, TRML, because it looks like TRML going off the board and getting bought. So, I mean, this is exactly what you're looking for here when you're covering biotechs to get a nice merger.
Absolutely. And, you know, so this one came in. Novartis yesterday announced they're acquiring Tourmaline TRML for $48 a share. That happened to coincide with our $48 target. So always good to be lucky. So I'll take that. But, you know, the bigger picture too, biotech M&A typically a little quiet in that August kind of summer period, typically does pick up in the fourth quarter. So really optimistic here as we're kind of moving forward. Big pharma does have a lot of pipeline holes to fill. That does well for mid-cap biotech with companies that have de-risked assets.
One other thing I wanted to talk about is, you know, in Washington, someone was in, someone was out, they was back in. Now you're not really hearing anything. Kennedy, his stance and everything. Have things seemed to calm down since? I mean, we haven't heard much on that. You know, you don't want to fight. You know, you don't want to fight the White House and stuff. If things calm down on that front.
Yeah. And, you know, I'm seeing little tidbits here and there. I think this morning it was Trump may go after Chinese drugs. There was a little bit of rattling about drug ads, things like that. But I think by and large, the bark is worse than the bite right now. So basically, I think we might be through the worst of it. Now, there have been a lot of headcount reductions at FDA, and that's been one thing we've been tracking. And I think, you know, that still keeps us a little cautious there, but FDA is a very efficient organization, especially when it comes to drug reviews. So I'm optimistic that we can kind of keep pushing forward here. And we actually did get a good update for one company, Travere today, TVTX, with the FDA canceling an advisory committee meeting.
Okay, that was TVTX. So let's hop to that one. I was going to go to another one, but let's talk about this stock. Boy, these charts are starting to look the same here. Tell us about Traverse Therapeutics.
Yeah, so Travere is focused on orphan diseases, and their drug that's on the market right now is Filspari, which is for a rare kidney disease called IgA nephropathy. Now we're seeing the pop today because they are also exploring a second indication with Filspari, and that's in another rare kidney disease called FSGS. Now, we previously thought that the FDA was going to convene an advisory committee meeting, and that's where it's kind of an all-day discussion, and they literally give you a vote on whether the drug should be approved or not. And this is before the drug decision in January 13th for Travere. But today, FDA announced that they no longer think they need the advisory committee meeting. So the review just continues, no vote or anything like that. So next data card to turn over for these guys on the FSGS front is going to be January 13th, where we have the FDA decision coming out.
Okay, one thing that's difficult to navigate with these biotech stocks is they get some good news on a drug trial, but then you're worrying about where they're going to get the money, right? To
Yep.
fund the trials, to research new drugs. So you worry about offerings, right?
Yep.
So this stock comes out for an offering here, 6.5 million shares at $33. Looks like you got some lucky people there. Here, talk about this stock in particular, and also like the timing of offerings and how you gauge the response.
Yeah, and so Dianthus DNTH, they had some positive data this week on their drug clesebrbart, which is for a rare neurological disorder, myasthenia gravis. The data looks solid here, and this is a drug that's going to be administered subcutaneously. So think of like the Ozempic pen. You can do this at home every 2 weeks. That's not really something that's available for myasthenia gravis patients right now. So it was great to see the efficacy. These guys do have to do a phase 3 study. And so they did complete an offering. I believe that priced just today, and upsize that to about $250 million. So, just generally speaking with the biotechs, when we're looking at kind of the models and the DCFs, I think that's just one thing you kind of factor into the valuation. They're going to have to raise money along the way. It's pretty expensive endeavor to get a drug to market. So you kind of build that into your model, and hopefully the upside offsets that dilution impact. And I think our current estimates had a $210 million offering assumed. So this is essentially right in line with what we were assuming. I think in general, you can assume to get a drug to market is going to cost anywhere between 800 million and about $1 billion.
What about the opposite? When you see these stocks just getting killed and going lower, then they still do an offering. Do you look at it as, boy, they're desperate, or like, okay, this is the time to do the offering. We're going to give shareholders a break here. And I could think a couple companies that have done this. I don't want to mention them by name, but talk about the opposite effect when offerings are when the stock after it gets wiped out.
Yeah, and I think it's it can be an unfruitful endeavor, I guess I'll put it. But the old mantra in biotech is you raise when you can, not when you have to, and it's specifically to avoid that situation. So I think companies need to be thoughtful, and when the opportunity arises, especially after a data event, when you have a rapid increase in the stock price, you have to take advantage of that, because you don't know how long that's going to persist. And if it's going to take you 7 to 10 years to get a drug to market, you have to be opportunistic in that way. So I think the companies that are a little bit more aggressive on the offerings and raises, that are doing it in a thoughtful manner, that's still the way you want to go directionally, because you need to have enough capital there to get to the finish line.
A lot of these biotech companies, some are just so one-dimensional. When that drug doesn't work, they're toast. But a company like Maze Therapeutics, they have patients living with renal, cardiovascular, and related metabolic diseases here. A relatively new issue here from earlier in the year. Got hit. The old, was it an IPO or was this like a reorg? It was an IPO. Okay.
Yeah.
All right. Well, it did what IPOs do, according to Eric Kroll, a frequent guest on our show. Now back up. Where's Maze? What's your outlook for MAZE?
Yeah, so we're looking for some data from Maze. It could come at any time. And I think this is for a drug in PKU, phenylketonuria. And this is a genetic disease where people have a mutation that prevents them from metabolizing phenylalanine. So it builds up in your body, becomes toxic, and it unfortunately can impact the brain. Right now, patients today have a few options that they can take in terms of medications, but by and large, they really have to avoid consuming protein because that's where phenylalanine is primarily. So you can imagine that's a pretty tough lifestyle. And Maze is exploring a new drug that kind of helps people eliminate that excess phenylalanine in their body and excretes it through the urine. So we're going to get the first data in a phase 1 study. And now this is a healthy volunteer study, but you're going to have a good look at this kind of biomarker to be able to see, is the phenylalanine exiting the body? And hopefully then when they get into PKU patients, we'll see the same thing. But I think, you mentioned the IPO. This is one part of the story that I think has been overlooked a little bit. There's been a lot more concentration on the kidney efforts that Maze has going on, but I think this is a pretty exciting opportunity.
Larimar. Oh, I'm probably not getting these.
You're getting them all right, Joel, today.
Really?
They're impossible to say. Like, there's a question for you. Why do they come out with these companies' names, these companies' drugs, and make them so difficult to say?
Job security for sell-side analysts, of course.
Nice answer. Go ahead, Joel. I had to stress that.
Well, Brent is really good at it. When we were on the pro desk, and then we'd be coming out, and I'd be like, something would pop during the show, and I'd be like, Brent, what? I don't know. Somehow, or else he says it so fast that it sounds like it's right. So
that's what say it fast.
Larimar Therapeutics, a clinical stage biotech company, really working on more rare diseases here, you could say. Nice. I mean, these charts are looking the same. The long-term chart doesn't look too good on the monthly, but it's doubled here since May. What's been the catalyst?
Yeah, their most advanced asset, and this is one company that does focus on one particular product, but nimlevofusp, and that one is really actually hard to say, is for Friedreich's ataxia, and this is another kind of neuromuscular degenerative disease. Patients have another mutation, and they're not making frataxin in this place. So Larimar is trying to replace that missing frataxin. And this is a shot that people take. And we're going to get an update on longer term data. And Larimar is interesting because they got this special designation from FDA. It's called START. And it's really part of a program, a pilot from FDA to try to pull forward orphan disease drugs. So they will be filing for approval for nimlevofusp next year. But I think people are very interested to see what this September data update looks like in terms of the safety. And then also, are people getting more expression of frataxin?
All right, let's move on to another one. OVID, I can get that one. Ovid Therapeutics, a lower price stock here. And if I'm looking at this and I'm looking at what they do, and I look at the price action in Sarepta, I'm thinking Sarepta's loss is their gain. Am I making some unnecessary assumptions here?
Well, this one is a little, I think people are getting a little bit more excited about the Ovid data that's coming up. And this is in epilepsy. And you did mention this is probably one of those more high risk, high reward names. But this month we'll also be getting some healthy volunteer from Ovid. And their idea here is advancing a drug called OV329, which is supposed to help make GABA. And that's a neurotransmitter in your brain. And you can kind of think about GABA as like the brake pedal. It slows down signaling in your brain. So the more GABA you have, slower the signaling. And for patients that have epilepsy, where you might have excessive signaling going on, that's exactly what you want to do. So this data that we're going to get from Ovid will hopefully tell us how much more GABA is being made in the brain. If we see a signal, that's great. They'll roll into an epilepsy study beginning of next year. And I think they also have another program, KCC2, which is a little bit earlier stage, but also very interesting to pharmas, bigger biotechs that are focused on neurology. So a couple things going on. I think that's really driving the momentum here.
Right. Sticking with this theme, generic drugs for epilepsy, SLDB, that would be a little dyslexic here. Yeah, SLDB. That's correct. $5 stock. I'm kind of looking a little bit of a pullback here. Haven't been much talk about the generic drug market. Talk about Solid Biosciences and how they're doing in the generic.
Well, this one is going to be drafting off of the Sarepta chart that you showed, because this is the gene therapy. Yep. So Sarepta has Elevidys, which is on the market, gene therapy for Duchenne muscular dystrophy. This was part of all that drama you mentioned earlier. They were pulled from the market. They're back on the market. Unfortunately, Sarepta's pain has been Solid's gain for a little bit here. Solid SLDB is working on a next-gen gene therapy for Duchenne muscular dystrophy. And we just had an update yesterday from the company that they're starting a new study that's going to be a placebo-controlled study in Duchenne muscular dystrophy, looking at 7 to 11-year-old boys. I think the technology from Solid is pretty interesting. The way they deliver this is more specifically targeting the muscle. So ideally, you'd see better uptake into that muscle. And this is one where you're trying to replace dystrophin. And these boys that have muscular dystrophy. They're lacking this protein dystrophin, which impacts their muscles. So I think this is definitely one to watch. And I think this might move faster than people think. They are going to meet with the FDA in the fourth quarter, and they should have about 30 boys dosed with this gene therapy by the beginning of next year. So I think this is one that could move quickly. We've seen Regenix Bio, which is another one, RGNX, also advancing. So I think it's interesting to see how this space evolves in the next couple of months, years here.
Laura, user in our chat wants to know about Biohaven. Not sure if you cover this BHVN, but if you can, give your thoughts.
Yeah, we used to cover them when I call them Biohaven 1.0. So Pfizer acquired some of the migraine assets, and then Biohaven 2.0, as we know it today, is currently around. I think they've had a tough go of it recently. They do have a PDUFA that's coming up in the fourth quarter. I think the biggest concern that I've heard from investors has been more related to the cash burn. They have a very broad pipeline, so a lot of different things going on, but unfortunately that has created a little bit of a cash burn issue.
We'll throw a few more at you and then just pass, or because that's I want to respect. BTAI.
That one, no, don't cover that one, unfortunately.
DNA.
Not
Okay.
DNA.
All right.
Sorry.
One I know you do for sure, and then we'll wrap things up here. BCRX.
That one we do. Yep, for sure. And I know the chart is probably not your favorite, Joel, but I really like this one. Nice. This is a company that's focused on yet another rare disease, HAE. And this is one where you're having these random rare swelling attacks. So people are taking drugs preventatively, like on a regular basis, to prevent the attacks. BioCryst actually makes a pill that people take. And I think this has shown a lot of growth over the last couple of years. Management is guiding to about $600 million in revenue this year. And they also have a pipeline update coming up in the fourth quarter that looks pretty interesting for a second rare disease program. So starting to broaden out the portfolio a little bit, which we always like to see diversification there. So I think this is definitely one to watch into 26. They recently announced a deal to sell some European rights. I think that puts them in a much better balance sheet position. So wouldn't be surprised to see them actually try to pick up more assets as we go into 2026.
Dr. Laura Chico, Managing Director over at Wedbush Securities. And if you can make me look like I know when I'm talking about biotechs, you are an excellent guest. Thank you so much. A hot sector, covering it. Glad to have you on. We'll be downing you up again real soon.
Thanks, guys. Have a great day.
Okay,
thanks,
thank
Laura.
you. Well, what do you do when a stock has a really big pop off some really good news? What do you do, Dennis?
Offerings. Don't expect Oracle to do any offerings. They don't need it. But like we said, NBIS actually,
right.
They got a $17 billion deal, potentially $19 billion, but the money isn't coming in immediately. And we're talking about a company that had $100 million in sales the last quarter. So, I mean, you get this pop up. It's not surprising that they're doing an offering here. I think what I would look at on NBIS at this point, and we've been trading this. We've been talking about it being a buy in the 80s. I know if there's a few members of STN that had great buys on it at 87, 88 yesterday and already flipped it out. It's going to get down there again today. You almost, in these cases, got to wait for that offering price, though. So the Brent Sturrier in the background here, and I mean, this is just hot off. This just came out 8:46. So we've only been out for 8 minutes. Do we have any color here? Is this convertibles? Is this just flat out common stock? What is convertible?
They're doing a $2 billion convertible senior notes offering that's concurrent with a $1 billion common stock offering. All
right, so they're doing the common stock too. So lots of offerings here, which is obviously dilutive to earnings. I usually wait to see the price, and then that price can often act like a floor. Let's just say the common stock price comes out at 85, then that's your new floor. So let's wait to see what the common stock price is. It often takes a day to get that price. They obviously got to shop, figure it out. So I think at this point in time on NBIS, I wouldn't be just all excited to come in and buy the initial dip, because this is a stock that had a pretty big move, and they're probably going to have to go down to find some buyers. I would not be surprised that offering's around 85.
Okay, so Dennis, you say you don't pay attention to charts or technical analysis, right?
I do. I just don't put it as number one. It's one tool in my toolbox.
Okay.
You don't build a house with just a hammer. You have to have lots of other tools.
So yesterday, this stock is trading, and naturally, the only thing I could think about is selling it or shorting it, right? I mean, that's just if you ain't fading, you ain't trading. But you're in the STN room, and this is also on PMP. You go, I kind of like this in the 80s, is what you said, and I said, I have no idea where to buy this stock. I have absolutely no idea. And I said, hey, drill down. I know you weren't looking at any 5-minute charts or any 1-minute charts.
I don't look at any.
I think Bill Big D picked it up in the higher 80s and stuff.
They did. He
How
flipped it up for $10.
do you just pull that one out of your what, or what? I mean, is that just a feel for the market?
Well, here's my thought process. Stock goes from 72 to over 100. Maybe at over 100, it was a little bit overdone. Like when we were talking and trading this live, in the STN room, we talked about it at 82, and I said, I think this could go to 100. This is huge news. I think you got to look at, revenue projections and market cap and saying that, hey, this all of a sudden puts this on the map. So this company's worth a hell of a lot more today than it was worth, before this news comes out. So the stock went off the board at 64.06. So it's worth a hell of a lot more. Is it worth $30 more, $35 more? The market is saying no. Is it worth $15 to $20 more? I say yes. And that's where I was coming up with the mid 80s, because that would bring us, $20 higher. Okay. So I think it's still the same. I think mid 80s. I think yesterday's low, if you're looking at buying the dip, I think yesterday's low 86.12 is a good target here at this point in time. But at this point, I would almost wait to see where the pricing is. Maybe they're going to get off good. Maybe they get off at 90. I don't think so, though. I think it's going to have to go in the 80s to get it. So I think that 86.12 is a number. I also think this is a stock that, with basically, not much revenue at all of a sudden it's got a huge contract. So now, do they hit all the numbers? Do they hit all those extra numbers in there? Well, that's to be determined. And this isn't like instantaneous money for them, which is why they're doing an offering. This is, of course, I believe the contract, Brent, was it over 5 years? The 17 bill? I can't remember.
I believe so. Yeah. Yep. 5 years. I believe so.
Yeah. Over 5 years. So, I mean, you start thinking that and you're like, okay, well, this isn't like instantaneous money for them. So I think it stocks in the 80s is where I would put it right now. That's where I think fair value is. So that's where I'd be a buyer.
Okay.
That's where I think this is an opportunity.
No, I mean, that's fair. I mean, the company executives listened to PMP and they decided to do the offering, around 85, 90, right?
Well, we're going to see. We're going to find out.
And that would be a good number because remember those after SoFi had good earnings? I will just say the trend, if this trend is up in the stock, these offerings, where'd they do that offering at like 20.5 or 2071? They did a big offering. Yeah, right here. And it came right down to it, stood there for 1 day and then took off. So you're in a bull market.
That's up for that because in some offering cases, people aren't interested in getting in. I think in this case, this is more of a, like people are looking to enter this thing. So I think it sets up where that offering price gives you a floor. Now, and nothing works 100% of the time, but I think that's where you'll find buyers is near down that offering price. So let's wait. Maybe that's going to be tonight. We'll get that offering price. Maybe it gets sucked down there. And why does that work? What is the mechanics behind that? It's simple, because people are getting long that stock and they're flipping it out for immediate. So if you just go all of a sudden, bang, it's at 85 and they're printing I don't know how many shares it was. Brent, was it 1 million shares? I don't know how many it was. Maybe you can look in the background and find that out.
Look.
To give the example. But let's just say hypothetically we're selling 1 million shares. Maybe it's not 1 million shares. Maybe it's 500,000 shares. We'll find out here in a second. But if let's just say hypothetically it was 1 million shares, 85. Stock's at 90. Well, there's $5 million there. So people who are getting that are going to be wanting to flip out. So to extract that basically free money because they got a way to participate in it.
I don't see, Dennis, I don't see the number of shares. It's just the value of the shares still. I see 1 billion.
But then anyways, those sellers drive the price down. Those natural sellers, the people who are getting 85, all of a sudden they become natural sellers. Some people short it in anticipation that they're going to get it. So that they just know, I got the broker, I got the deal, I'm going to short it 91, 92. The algos are out there shorting. It's just anticipation that the offering price is going to be lower. That's why these things work. That's it.
That's tough. That's a tough way to play it. That really is. Okay,
well, it's not tough. It's actually, that's just, again, understanding the mechanics and how everything works. And I mean, you get that offering price. I actually think it makes it easier once we get the price.
If you were shorting it yesterday, in anticipation of this, I'd say, yeah.
That's a good call. Yep. Shorting it now at 90. What if the offering price is 90? The thing will be 92. Because it probably isn't going to get down to the offering price. It's probably not going to get that low. Sometimes they do. Sometimes they breach it. But in this case, it's a stock with a hot story here right now. Probably going to be more of a floor than a ceiling. The Brentster here, we got him. He's going to come in and read our sponsor, Hive Blockchain, which had a great day yesterday, by the way.
Oh, my gosh.
Bring up the Hive chart here yesterday. That had a nice day.
What did it close up?
It was up like 10% yesterday.
Yeah.
Nice day. Like I was saying, valuation on this thing is actually quite reasonable here. We know Frank. So no positions on it. None of us have positions that are a sponsor, but I kind of like it.
Thanks to Frank. Thanks to Hive. This show is brought to you by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production. By the end of this year, there is a QR code in the bottom right corner of the screen right now. Scan that code or visit the link in the description to learn more about Hive Digital Technologies. Thank you again to Hive.
It's sponsors like Hive that keep this show free, so give them some love, man. Go and just check it out because they do some stuff over there. It's kind of interesting, too. Like, I went over there, it's interesting what they do. Very interesting.
Okay, tomorrow, we had a benign PPI after that rocky report last month. CPI tomorrow, and we'll be joined by our boy, Blue Putnam, former chief economist at the CME. We got a busy open coming up here, folks. Let's move over to the STN room and get going. Everyone, have a